Bank of England has officially cut interest rates to below 5% as inflation cools off, but will it continue to fall? My name is Jack Revis and welcome back to this week's episode of Tax Tidbits, where the Bank of England has lowered interest rates from 5% to 4.75%. 8 of the 9 committee members backed the cut, viewing it as a helpful step to support growth. One member voted to keep the rate at 5% due to the recent wage increases and changes implemented in the budget, such as the rise in employer national insurance contributions, which may push prices up again. This cut should offer relief to borrowers, especially those with variable rate mortgages, but you may see a reduction in your savings interest as banks reduce the interest rates on their products. Despite the current drop to inflation, we can expect prices to rise slightly by the end of the year, but the bank expects inflation to stabilise in the coming years, which will allow them to gradually lower interest rates. Talking about price rises, companies including Sainsbury's, Marks & Spencer's, BT and Wetherspoons have warned that higher employer national insurance contributions could lead to price increases for consumers. As you may have heard, from April, employers will pay a 15% NI on salaries over £5,000, up from 13.8% on salaries above £9,100. This change is expected to raise £25 billion per year for the government, and Sainsbury's has estimated that it will cost them £140 million. The government has defended the change as necessary for economic stability, but critics argue it could curb pay rises and hiring of new staff. QuickBooks has launched a new app called QuickBooks Sole Trader, aimed at UK sole traders and single property landlords earning under the VAT threshold of £90,000 per year. This tool will eventually replace QuickBooks Self-Employed, which was heavily disliked by accountants due to the lack of features and also the inability to move onto other QuickBooks products as the business progressed. Unlike the previous app, Sole Trader integrates with QuickBooks' main platform. It allows users to manage receipts, mileage expenses and invoices, and also connect with accountants to make tax preparation easier. The post office may close 115 branches and cut head office jobs as part of a big shake-up to stabilise its finances. This plan, led by the new chairman Nigel Ralton, would focus on finding franchise partners to take over the loss-making branches, which currently employ around 1,000 workers, all of whom would therefore be at risk of losing their jobs. These plans aim to save money and boost pay for sub-postmasters, update IT systems and adapt to changes like fewer letters and less in-person banking, though they are subject to government funding. UK unemployment rose by 0.3% in the 3 months to September and now sitting at 4.3%. Additionally, pay growth is slowing, with wages now rising at the lowest rate in 2 years at 4.8% per year between July and September. These are some scary sounding statistics, but I'm actually going to shed some positive light on these today. So while wage growth has slowed, it's still rising at a much faster rate than inflation currently, which was 1.7% for the same period. Additionally, while the Office for National Statistics reported a 0.3% increase in unemployment, they also urged caution for putting too much weight on these figures, as the estimates were particularly volatile due to a small sample size. So are we being optimistic, or is the labour market slowly recovering? Thank you for joining us for this week's instalment of Tax Tidbits. Remember to show your support by giving this video a thumbs up and hitting the subscribe button to stay informed about all of our future videos. See you next week.